Premier Life and Annuities. I want to welcome everybody here on our weekly Monday morning webinar. Today's topic of discussion is understanding the flow of money. Today's guest speaker today is Seth Groff. Seth is the manager of life products at Assurity Life Insurance Company in Lincoln, Nebraska. His main job is assisting agents in advanced case design, sales training, and strategic planning. So we will get started in this discussion. Seth, welcome aboard.
All right. Well, thanks, Mark, and thanks, everybody, for taking a little bit of time to jump on today and hopefully learn about a sales idea that I believe you can start using conversations with your clients immediately. This is a concept that can easily be done on the back of a napkin. It can be easily done on, a piece of notebook paper. But really the purpose of this idea of understanding the flow of money is really helping your client understand where their paycheck goes. So when you talk about Assurity and when you ask Assurity what our value proposition is or what markets we focus on, we always say that we focus on middle America or middle income families. And although there's a wide variety or a wide definition of what, middle income families or middle America consists of, how I define it is that individuals that have to get up and go earn a paycheck to maintain their current lifestyle for their families, okay? And so that's going to be most of the people that you work with, that they have to get up, go to work every day so that they can earn a paycheck. But what a lot of people don't understand is they don't understand where their paycheck goes or areas where they might be losing money. So the easy way, or what I do to explain this to a client or to show them where their money goes is basically on the back of a napkin is I draw a circle. Okay, and if you're listening on today's call, because we don't have a PowerPoint for today's call, it's all going to be audio. So if you have a great piece of paper, go ahead and grab it, and I'll describe to you what you need to draw on the circle, and then Mark can email you out the graphic at a later time so that you can see it as well. But basically what I do is to help them understand the flow of money is that I draw a circle on a piece of paper. And then what I tell them is that this circle represents their income. Now, some people's circles will be bigger, some will be smaller, but based on their income, basically their paycheck will go to 4 different categories. And then the next thing that I do is I draw a line horizontally down the middle of the circle, okay? And so now the circle is cut in half. And on the bottom half of the circle, I'm going to write lifestyle, okay? So a large portion of their paycheck, about half of it, is going to go to maintain their current lifestyle. Now, as consumers, we love our lifestyles, right? We love the $5 coffees. We love the vacations. We love the big screen TVs, right? So we don't like people to mess with our lifestyle. But then there's also 3 other categories that our paycheck is going to go to. And so on the top half of the circle, what I do is I draw a V so that basically it's divided up into thirds. So on the top half of the circle, I should have 3 pieces of the pie, and it all should be equal in size. Now, one of those pieces of pie represents taxes, okay? And so on the right-hand side of the top, I write taxes. Now, of course, Uncle Sam wants his portion of our paycheck, right? And this is easy for most people to do because this is automatically deducted from their paycheck. But a piece of our paycheck every week is going to go to pay taxes. On the left-hand side, or the upper left-hand side, I'm going to write debt. A portion of our paycheck is going to go to pay down debt. We have a mortgage where we have to pay interest. We probably have car loans that we have to pay interest, and maybe we have credit card debt. But another portion of our paycheck is going to go towards debt. And then if there's anything left after we pay down debt and after we pay down taxes, we put money into savings and investments, and that is the middle piece of the upper half of the circle. Now, unfortunately, The way that we do our paycheck is that we usually pay in this order. First, we pay our taxes because that comes out automatically. Then we pay our debts because we owe the bank or whoever that might be. And then the rest of the money goes towards our lifestyle. And then if there's anything left over, whatever's left over might go towards savings and investments. Okay? But basically the flow of money goes to those four quadrants. And the one that's probably the most important, the savings and investment piece of the pie, that's what we fund last, right? So now when you look at life insurance and how life insurance comes into this and helping people understand is that where do you think most insurance agents go and try to take life insurance premiums from? And the answer to that is they usually try to go take it from their lifestyle piece of the pie, right? They say, just don't go out and eat one less time a month. It's only a cup of coffee a day. Whatever the case might be, they try to take it out of that lifestyle portion of it. And as a result, because consumers don't want to give up their current lifestyle, as a result of doing that, term insurance is often sold, right? Because, if you're going to give up some of your lifestyle, you don't want to give up very much. And so most of it's going to be sold in term insurance, and that comes out of the lifestyle portion of the circle. But what I tell clients and what I teach agents to tell clients is that what you can do or as an agent or what I can do for them is that I have strategies where we're going to go and try to reduce your debt, or we're going to try to reduce the amount you pay in taxes. And as we do that, we're naturally going to increase the amount we put in towards savings and investment. And if we can do that without ever impacting your lifestyle on the bottom half, is that something you would like to learn more about? And the answer is yes. And that's all the question. That's my entire lead-in into the presentation. It's real simple. It's a simple circle. I can draw it. I think I just went through the setup for it in about 5 minutes. But that's what my strategy is I'm showing them how I, as an insurance agent, can reduce their debt and eliminate their taxes, and as a result, increase the piece that they put towards investments and savings. So with that, Mark, that's the napkin presentation that I show to agents to help them understand the flow of money.
Okay, well, that's pretty simple. I think that most agents can get the hang of that. Let's get into more specifics then. What are some of the ways to actually reduce taxes? What are some of the tools to reduce taxes and reduce debt?
Yep. That's a good question, and I'm going to touch on them from a high-level aspect because when we get into looking at ways to reduce taxes, that can turn into an hour or 2-hour presentation. But I'll hit on a couple of them just to give you an idea of what I'm talking about. First of all, the agents that use this strategy regarding the debts and reducing the debts, what they're doing is basically they're helping them get rid of high interest debt, right? And so they're helping them get rid of any credit card debt or any other debt that they have a high interest loan on. And the way that they do that is a pretty simple concept called snowballing your debt, okay? That it typically doesn't involve life insurance. You're just showing them how the best way to pay off their debt in the most timely manner. If you go out online and just type into Google snowballing debt, it'll show you strategies to reduce their debt. So that's just basically a service that you're going to show them on how to reduce their debt. Now, taxes is where life insurance can come into, okay? And there's several ways that your clients are probably losing money on their taxes that they're not aware of. The biggest one right now, now is tax season, and your clients are out getting refund checks, right? So right now they're doing their taxes and they're getting a refund check. Well, if they're getting a big refund check, I would go back and look at what they're claiming on their taxes, because it doesn't make sense to let the company, or not the company, excuse me, it doesn't make sense to let the government keep your money for an entire year and then refund you at the end of the year. And so you show clients how they should structure their taxes so they get as close to, basically zero, of not having to owe anything, not having to owe anything as possible. And then the difference from what they were getting in there from the refund, you basically put into a life insurance policy. And as a result, you're basically losing opportunity costs on that money that the government was keeping from you. Now, by switching your taxes so you don't get as big of a refund, you're regaining that opportunity cost. And if you put it into a cash value life insurance plan, it's going to grow over that course of the time. So that's one way, is to look at what they're claiming on their taxes. Another one that I look at is for people that are contributing to a 401k at work, okay? Remember that one of the advantages of life insurance is the tax efficiency, that we can put money into it and basically we pay for it with after-tax dollars, but then we can access it tax-free. What I look for, the other place where I look, and I can show people how they're going to end up paying more with the 401k, with a deferred account with 401k and saving taxes, is anything that they're contributing to a 401k over the company match. And so what I mean by that is that, like, a lot of companies will say, okay, we'll match your contribution up to a 401k, let's say up to 5%, okay? If I'm looking at that, I will tell the client that to fund it up to the match, because that's basically free money, right? So I can't really compete with anything up to the company match, but anything over that company match, basically I can take it and show them how we're going to be able to reduce their taxes in the long run with a life insurance plan. So the second place that I always look for is people that are overfunding their 401k. And then the third area that I look for is for people that have a 15-year mortgage, okay? People that are looking to pay their mortgage off early have to pay more money, right? Well, one of the advantages of having a 30-year mortgage is that in the early years, you get to deduct a lot of your payments. Or, excuse me, you get to deduct a lot of your payments on your taxes, right? Well, when you switch to a 15-year, you lose the amount that you can deduct just because of the way that the loan is structured and the interest payments that you're making. So what I'll show them is that if you actually switch to a 30-year term, and with the difference, or excuse me, a 30-year mortgage, and then with the difference in the premium, because obviously your 30-year mortgage is going to be less expensive than the 15, and with the difference in it, we'll actually put it into a cash value life insurance plan. That way we're maximizing the amount we put. That way we're maximizing the amount we put, or we can deduct on our taxes, and then about in year 15, we'll have enough cash value in the policy, if we structure it properly, that we can pay off the remainder of the mortgage at that time. So basically what it allows us to do is it allows us to maximize the amount we deduct, and then we still get the house paid off in 15 years because we can access the cash value. So Mark, really those are the first three that I look at, and usually most people I can find one of, they're usually, if they're halfway relatively successful, those are one, they're going to be doing one of the three of those things that I can look at. So.
Okay. Well, then what products does Assurity recommend then to work with these strategies? I heard you say cash value. So what's the best product that gives the best chance for each individual?
Yeah, I mean, at Assurity we have two that will work with this. One is our participating whole life plan, and one is our current assumption UL. And so either one of them, if structured properly and funded properly, can do this. Why would I select one over the other? When you look at the whole life plan, that is going to have a little bit stronger guarantees. The UL is going to have a little bit more flexibility. So if it's a young couple or if it's a business owner that might have ups and downs in their current income, I'll put them towards the UL because of that flexibility. If they're a little bit more established and their income is steady, I usually put them towards the whole life. But either one of them, there's not a right or wrong answer there for which one's better. Either one of them will work great. It just kind of depends on what the client is looking for.
All right. Okay. So you got two products. Both of them will develop cash, and both of them, where are you looking at for those cash values? How long down the road are you projecting for each of those? I think you mentioned in there you're looking forward to, say, 10, 15 years down the road is where you have enough cash.
Right. Yeah, it depends on what strategy you're using, but any life insurance plan, you're looking for long-term growth. Okay, the longer you have a life insurance policy, the better your internal rate of return on the policy is going to be. So if they're looking to do something in short term, 3 to 5 years, life insurance, the cash value might not be the best strategy. But if they're in this for a long term, which most people are, life insurance is good. Plus, you get the death benefits. So there's not a specific time, but it's going to be down the road.
All right. Well, that leads us into another question that I have is, what is the ideal client that agents should be looking for this type of program?
Yeah, a couple of things. One is obviously they have to get up and earn an income, right? Because if they're not earning an income, then there's not a whole lot that I can do for it. But second is that they have to really be committed to a couple of things. One is reducing their debt. Okay, if they're not truly committed to reducing their debt, this strategy will not work because we got to get the debt under control. And unfortunately, that I have to put that a lot of times on their shoulders, right? They have to be making additional payments more than what they're required to on their debt. If they're not, they're probably not going to be a client for me. So I'm really looking for those people that are responsible and truly committed. If they're not, then it's just not going to work. Also, people that have their lifestyle under control and they're living below their means. You see a lot of people that are spending more money on their lifestyle than they are bringing in. I'm not going to mess with them because I know that they're not going to be willing to do the life insurance. So those are really the things that I'm looking for. Is one is just that they're relatively well established in their career and that they truly are committed to making some changes. If they're not, they're just not going to be a good fit because they're not going to be willing to pay the premium and stick with the plan.
All right. Well, Seth, I think that's pretty well covered it. We've gotten close to 20 minutes in here on this conversation, what we've been doing. I'm going to try and unmute everybody that would want to ask any questions right now that's on the webinar. So give me a second here or two as you get unmuted. Please be respectful of this, and we're going to be hearing everybody that's online, so please mute your own line. If you've got a question, feel free to ask Seth what you'd like to ask on this.
Oh, I don't know. You come down.
Or has anybody got a question? You're all unmuted. If I can get you.
Oh, yeah, sure, no problem with GPS.
All right. Anybody have a question for Seth?
Yeah.
All right.
Carlos, do you have a question?
Okay.
All right. Well, Seth, it doesn't appear that anybody's got a question right now. We will have this recorded so that anybody can get a recording of this. Next week, we'll have another new month starting off. So any questions in life insurance, please give us a call here at Premier at 800-365-8208 and ask for your life team. That'd be myself, Mark Landholm, or Kathy and we can get Mark or Kathy. His teams can help you with any of your life insurance, and also Seth is available at Assurity. So,
yep,
Seth,
absolutely.
I want to thank you.
All right. Well, thanks, and let me know if there's any questions.
We will. Look forward to seeing everybody and hearing everybody again next week, next Monday, 10 o'clock.